Hi, this is Iris, a realtor and landlord in the Pioneer Valley, Massachusetts. Today, we will cover the third part of real estate investment, and we will discuss what kind of ownership we want for our rental properties. I will focus on the pros and the cons of sole proprietorship and the limited liability company, LLC. A sole proprietorship is the default form you operate a business. If you don't do anything to form a business, and you go to a bank and borrow a loan in your own name for the rental property, then you are in a sole proprietorship. You are personally responsible for its profits and debts. The income from the business is taxed at your personal rate, and you don't need to file a separate tax return for your rental property. Sole proprietorship is easy and saves time and money. However, it doesn't provide asset protection when things go wrong. For example, if somebody falls on the stairs of your rental property and brings a big lawsuit against you, then all your personal assets are at risk. Your rental business and your personal assets are one item in sole proprietorship, and this is its big drawback. A limited liability company, LLC, is a registered business, and you can register it yourself in your own state, or you can hire a registered agent to do the job for you. In Massachusetts, it costs $500 if you do it yourself by sending the paperwork in the mail to the state, but they charge you $520 to do it online. You can also have your LLC registered in another state, such as Delaware, Nevada, Wyoming, and you do need a registered agent in that state to do it for you if you want your LLC registered outside of your home state. LLC is a business that offers the personal liability protection of a corporation with the pass-through taxation of a sole proprietorship. LLCs set up a wall between your personal property and your business. It limits your liability to the extent of your investment. LLCs are fairly easy to set up, and it can be single-member or multi-member. The LLC is a pass-through entity, and you don't need to file a separate tax return for this business. All of the income and expenses are reported on your personal tax return. So, do we want to have our investment properties in a sole proprietorship or set it up as an LLC? It really depends on who you are and your personality. If you like to take some risk for a cheaper and easier approach, you probably stay as a sole proprietorship. If you want to spend a little extra effort and a little money to separate your personal assets from your business investment, you set up an LLC. An LLC offers you the liability protection with the pass-through taxation of a sole proprietorship. If you choose to stay as a sole proprietorship, I do recommend you to buy a good umbrella insurance, which provides you and your family some liability protection. Some investors I know started out as a sole proprietorship, since they don't want to be bogged down by too much details to begin with. Once they bought their first 1, 2, or even 3 rental properties, they want a better protection and set up LLCs for their future properties. That's it for today. Thank you for watching. See you next time.